Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello and welcome to a new episode of the Business Line State of Economy podcast. Today, we have with us Mr. Vikram V, the Vice President and Co-Group Head, Corporate Ratings at ICRA. He has been associated with ICRA for more than a decade and leads the team on research and ratings in the power sector, spanning across conventional generation, renewable generation, power transmission, and power distribution segments. Today, we will discuss the scenarios surrounding the gas-based power plants. Now, many of us are aware that government came out with Section 11 of the Electricity Act, which ensures power plants to run at optimum capacity. And the section was put in for gas-based power plants. And subsequently, their plant load factor, which used to be in single digits, has risen to 21.4% in April 2024, which is a 4-year high for the month. Now, under the current scenario, leveraging Vikram's deep expertise, we'll try to do a review of the scenario around gas-based power plants, how viable they are, what are their future prospects, how much will they contribute in India's economic growth. So without wasting any time, I'll go to Vikram.
Thank you, Rishi. Thank you very much for having me here.
I'll straight away go to the questions. So Vikram, take our listeners through what is the scenario right now for gas-based power plants in the country?
Sure. Again, just to put some context, just to go back a bit in the history, if you see the gas-based projects and the utilization of the last 10 years, raised from 2014 onwards, largely the utilization of these plants has remained around that 20 to 25% mark. And in fact, in 22 and 23, 22, 24, it has come down to below 20%. And essentially, this is because of the cost and economics. The availability of domestic gas was a concern, was a challenge for these gas-based power plants, and the cost of generation using the imported RLNG was not economical in relation to the average power purchase cost of the discoms. So discoms were not willing to procure this power at such high cost. Essentially, this led to the suboptimal utilization of the gas-based power plants over the years. And when the gas price went up significantly a couple of years back, the utilization came down further to less than 20%, in fact, to around 10-11% in 2023. Now, coming back to the current development, essentially, if you see the demand growth, it has been growing at around 8-9%. I think it was about 9.6% in 23, about 7.5% last year, and even this fiscal first quarter has been around over 10%, with April and May witnessing double-digit growth. And in this context, given the fact that we are not adding a lot of thermal capacity, if you look at the capacity addition last year, we have added about 25 gigawatt, of which 18 gigawatt is your renewables, and the balance is your nuclear plus thermal. So essentially, we are focusing a lot more on renewables, and the capacity addition in the thermal segment remains limited. In that context, when you add renewable, the utilization of this is only about 20-30%. So you'll only get, if you're adding 18 gigawatt, you might get maybe 4 or 5 gigawatt capacity on an ongoing basis. And again, this is seasonal, cyclical. Solar is only available during the day, wind is only available during 4-5 months in a year. So in that context, the demand growth, the limited capacity addition, the larger share of renewables, all of these factors have led to this requirement of a balancing source, one. And second, obviously, is the way demand is growing, especially during the peak demand period. You need capacity to be available to meet that demand. In this context, the government has issued directions to all gas-based power plants under Section 11 of the Electricity Act to run these plants based on the directions from the grid controller under a cost plus mechanism, wherein the energy charge rate will be determined by a committee set up under the chairmanship of CEA. And this committee, for every 15 days, based on the prevailing gas prices and the transportation costs, will determine the price. And the gas-based plants are required to operate the plants and offer the supply at this rate, either through PPAs if they have a PPA, and if they don't have a PPA, they have to offer this in the power exchanges or to the grid controller for acting as a balancing source. And that has led to the improved utilization that you're seeing in the last 2 months, April and May, where it has gone up to about 24%. Last year, same period, it was about 14-15%.
You've partly covered the issue. If we look at even the past decade and a little more than that, why has gas-based plants been so underutilized? They can really help in grid balancing per se, quick ramp up of power. But why have they largely been so underutilized?
As I mentioned, one is obviously the economic aspect which is related to the cost of generation. Given that the gas availability from the domestic fields was limited, the gas-based plants were required to depend on RLNG. And with the cost of RLNG, including the regasification, the transportation, marketing margin, all of that, the cost of generation for the gas-based plants was coming more than 7-8 rupees. In sometimes when the RLNG price went up, it was more than 10 rupees per unit. While the average power purchase cost of the discoms would be around that 4 to 5 rupees mark. So discoms are not really forthcoming to procure power at high cost, except maybe few discoms where there was a requirement during the peaking period of the day. Otherwise, largely these projects remained underutilized because of the fact that the cost of generation was much higher and the price point was so high that the discoms were not willing to look at this as a source of procurement. And the second aspect was that even the thermal power generating stations were a bit underutilized. Obviously not to the extent of the coal-based power plants, but because of the large capacity that was added between 2012 to 17, and the fact that the demand did not grow in what one expected during this period, the utilization of the thermal power plants also remained subdued. I think it was around that 62%. It came down to 54%. And then last few years, it has been going up with the increase in demand. So the availability of surplus capacity on the thermal side, where you have a lot of plants which are underutilized, the fact that the cost of generation was very high, and you did not have any such cost-plus arrangement, which is there currently, which has been directed by the central government. Given all these factors, the discoms are not willing to look at gas as an option in terms of sourcing the power. But in the current context, where we have already touched 70% or been close to 70% for the thermal-based stations, the demand is still growing, and you need the supply, whatever supply that is available. And the government has given these directions for ensuring that these plants supply at a cost-plus mechanism, because if they supply with whatever tariff that they have agreed in the PPA, it would not be economical, and then discoms, they would be loss-making. But given the current directive of the government, where they have agreed to allow these projects to be supplied on a cost-plus basis, and then there is demand also, this has led to this utilization currently. But these factors which were not there earlier in terms of the cost, in terms of the cost of generation being higher and no such direction from the government earlier, and then the underutilization of the thermal stations itself, where you have coal-based stations itself, where you had ample scope for enhancing the utilization and using that capacity. This was the background in terms of why they were underutilized over the last 10 years.
So, Vikram, right now the government is running these plants under a strict mandate for meeting the power demand. Someone like you who has seen this sector grow in the last decade and has closely followed these developments, how good are prospects that we will be utilizing gas-based power plants besides the peak power demand season, maybe April, June? If we see last year, then September was again a high where we clocked 240 gigawatts of peak power. So where do you see these maybe they're just in the middle of the year? That is where their utility will be in the next 1 to 2 years. How do you see this in the short term, gas-based power plants performing?
See, in the short term, it will largely be used for peaking power demand, meeting the peaking power demand, and possibly for grid balancing. And while the utilization would improve compared to what we have seen in the last couple of years, it still remains suboptimal, given the fact that while the share of the utilization of the coal-based plants has gone up, there is still some scope where one could utilize those plants in terms of incremental utilization of the existing coal-based capacity. So we may not see a very significant jump from here on in terms of the utilization of the coal-based plants, at least for the next 1-2 years. But it will remain around this range, and it will largely be towards the peaking power requirement. Again, that too subject to the government's directions in terms of the cost-plus arrangement. If that is not there, again, these projects will not be viable to supply to the discoms at a lower rate, given the way. Because even if you look at the domestic gas cost, which is about $6.5, and then if you add your marketing margin and your transportation, the variable cost of generation for the gas-based plants will come to around 5 rupees per unit. And if you consider imported RLNG, the variable cost will come to about 8-9 rupees per unit. So they'll need at least that much, because that will have to cover for their cost of generation, and then whatever addition they get would cover for their fixed cost. And this is obviously higher than the average PPC, average power purchase cost of the discoms. But nevertheless, if we are using this during the peak demand period, we can still justify this, because the short-term tariffs are hitting the ceiling of 10 rupees during the peak demand period. So that way, during the peak demand period, one could utilize these plants and run these plants. But over a longer period, how do we see the prospects for these projects? It all depends on the way the demand would grow, what kind of demand growth that we would see. Second would be what would be the increase in gas production in the country, and obviously the pricing of the gas. And third would be your storage projects, energy storage and renewable. Because gas, as you mentioned rightly, can be used as a balancing source. It could peak quickly, it can be brought down quickly. Now, when the share of renewable goes up in the energy generation mix, you need these balancing resources to manage the grid. One way of doing that is obviously setting up storage projects, storing the surplus energy, and then using them when you have a demand but supply is not there. But again, we are still early. We are still as a country, we are in a still early stage of development of these storage projects. We have seen some bids being rolled out, but we are yet to see any large scale execution of these projects. There are few projects in the PSP hydro space, but otherwise battery, again, there's still a lot of work to do. Now, if these projects don't come up within the timeline which the government is envisaging, I think government has come out with this optimal generation mix plan by 2030 and the national city plan by 2032, where various estimates of storage capacities have been given. If there is a significant shortfall against those storage capacity estimates by this timeline, obviously that balancing may have to be done by the gas-based projects, and that could possibly open up a prospect of improving the utilization of gas-based projects. So to summarize, it's a function of the demand growth, the availability of gas and the pricing of gas, especially from the domestic sources. And third would be your how the share of renewables go from here, and to what extent are we able to build energy storage projects to manage the growing share of renewables in the grid. So these would be the key factors which will drive the prospects for gas-based power plants over the medium to long term.
So that's a great response, and that's great that you concluded with the prospects for medium and long term. I'll take a minute, and I wanted to build a narrative, because there's second part of this podcast I wanted to devote to future prospects. So last week the Institute of Energy Economics and Financial Analysis, they came out with a report on global LNG markets, and their estimation is that gas-based power plants roughly by financial year 2029-30 will largely have a limited role of providing grid flexibility. Now that's one view of looking at it. Roughly we have 25 gigawatts of grid-based capacity. 24.8 is under monitoring. We have a 500 gigawatt target for renewables, which may largely the share of solar would be there. And as you rightly said, that battery storage and pump storage projects are at various stages of execution. And most of us are aware that pump storage projects, the gestation period is higher for PSPs. And for grid scale, of course, there is talk about grid scale storage coming in. But there are a lot of ifs and buts between today and 2030. So for for the convenience of our listeners, if you could break up, where does gas figure out in this developing scenario of clean energy and green energy technologies, where we go in for more solar and wind and small hydro and nuclear? Part of the question you've already answered in your previous answer, But if you could, break it down further for the convenience of our listeners, because this 7-year window, where would we see, would we really need gas-based power plants by 2030 if we, because the way if these battery storage projects of pump storage and BESS develop, we might not need them. So, just to clear a little more understanding for our listeners.
Sure, sure. So again, just to understand where we are currently and where we could be in 2030. Currently, if you look at the generation mix in the country, about 3/4, that is about 75% is contributed by coal-based capacity. I'm talking about the generation mix, not the installed capacity. So coal-based is about 75%, hydro is about 8-9, renewables, which is your wind, solar, small hydro, biomass, all of this is about 13%. So renewables plus your hydro would be about 21-22%, and balance would be your coal and a small contribution from gas and nuclear capacity. So by 2030, again, this is CA's estimate, the coal-based capacity's share in the generation would come down to 55, and the renewable plus large hydro will be about 40-41%. And our estimate is about 37-38% thereabout by 2030. So as the share of renewables goes up from say 20% to closer to 40% by the year 2030, and within this 40%, a significant portion would be your solar. If you leave out the hydro of maybe 8-9%, and the balance within the balance 30%, this solar would be would have a major share in terms of the generation. This would happen during the day. Now you will not be able to absorb the entire power that is being generated, and that's where I think this plan for developing energy storage projects so that we could store this energy and use it when solar is not available during the evening and night hours. And that's where government and CA are envisaging to add about 60 gigawatt of energy storage capacity by 2030 through a mix of battery and pump storage. And as you rightly pointed out, storage projects, especially PSP hydro, will take 4 to 5 years at least to be developed and constructed and operationalized. And while there are some projects which are underway currently, I think we may not see, I think within this 60 gigawatt, about 20 gigawatt is supposed to come up from PSP hydro. We have to see how much of this gets commissioned, and then balance 40 is about battery storage. Again, battery storage, we are very, very small right now. I think less than 300-400 megawatt, I think right now in the country. There are a few projects, but very small. A lot of projects are being awarded. SECI has awarded a few projects. Gujarat Utilities have awarded a few projects, and a few more under the works. But again, it all depends on the battery cost, the cost of storage, how it will work out, and the availability of the batteries, because we don't have the large manufacturing base for grid-scale batteries in India. We are dependent on imports. That value chain has to be developed, the projects have to be awarded, and the projects have to be executed in timely manner. So there are a lot of factors which have to fall in place for these capacities to come in. Now, while your solar and wind capacity grows, and if the storage capacity don't grow in a commensurate manner to ensure the availability of storage capacity to manage this integration of renewables with the grid, then obviously the grid stability would become a concern, and there could be a possibility of curtailment of these projects. In such a scenario, the use of gas-based plants would be required to manage the grid, balancing the demand and supply. While you may not be able to store the surplus power, but at least in terms of the grid balancing, gas-based projects would help you in terms of the balancing, acting as a balancing source and also acting as a support provider to the grid operators in managing the demand supply curve. So, as I mentioned earlier, it's a function of three things: demand growth, obviously the cost economics for gas-based plants in terms of their cost of generation, and what is the average cost of sourcing for the discoms, and third, obviously, is the development of the renewable energy front. Would storage capacities keep up in terms of the requirement to match the what the government has intended in terms of 500 gigawatt target? If we have to achieve the 500 gigawatt, we have to have enough storage capacity. Without storage, even if we get there could be a risk of curtailment of these renewable energy capacity when you have surplus generation and you don't have the demand at that time. So these three factors would be the key drivers in terms of how gas-based power plants would fare going forward. And obviously, the government support in terms of this Section 11 directive, or kind of allowing on a cost plus basis, because without cost plus it will become very difficult for these gas-based plants to operate. Of course, if the market prices go up in the exchange, that's a different thing that you can obviously operate and sell power in the exchange. But if the market exchange prices remain below your cost of generation, only a cost plus arrangement can help the gas-based plants to improve their utilization.
Oh, that's a great summary. The last question is again on the future part, but let me again build this narrative. So there are two narratives from the battery side and from the gas side. From the battery storage side, yesterday I met the India Energy Storage Alliance key members. They are going to host the India Energy Storage Week in July, and they had the same discourse which you've been mentioning, that right now India does not have lithium resources. We have identified some, but to first auction them and then to have a processing facility would be a 7 to 8 years game. While in foreign geographies such as Australia and a couple more, China, they already have processing units. So as in there would be imports. Domestic production with lithium would still take time to develop. Now, this is on one hand, and to add to this, what you've already spoken about, the uncertainty factors which are playing in between. Another point is that, as we were discussing earlier, more gas and a sizable amount of gas-based capacities are expected to come online by 2027, 2028. And this will be from Qatar and the United States and Canada. A couple more, maybe from Iraq or maybe from Iran side. Russia is also there with LNG cargoes. Now, and we are aware that the gas LNG trade dynamics have changed considerably since the Russia-Ukraine war. Now, here the thing is that at present in May, the prices, Indian prices, the West India marker for LNG, the prices were roughly around $10.8 per MBTU. Now, this is economically unviable for gas-based power plants. There is a theory that with more capacities that will come by 27, 28, the prices might go down to as low as $7 per MBTU. And if such a scenario happens, do you think Indian establishment might want to, continue supporting gas-based power plants to run? Because that second scenario would be that there would be still some time where battery storage ecosystem matures further.
Right. So if the pricing comes down, the gas pricing comes down, it becomes economical in terms of the cost of generation for these gas-based plants. Obviously, they would not need any such support from the government in terms of the social directive. And also government would not be willing to do that. They can obviously themselves offer this capacity to the discoms and supply to the discoms or sell in the short term or the medium term market. That much would obviously be supportive for the gas-based plants in terms of their improving their utilization. But again, predicting oil gas prices is something which is, while one may attempt it, but again, it's a futile exercise, I would say. It all depends on a whole host of things, the geopolitics of it. It's not just the demand and supply, but a lot of geopolitics also. So, but definitely, if the supply improves and pricing comes down, that will be advantage for the gas-based plants. They could offer this supply to the discoms either under PPAs or through the exchange market or the short-term PPAs, because demand growth is there. The way country is growing, demand growth will be there. So as long as you are able to offer power at a very competitive rate, there will be demand for you. Unless something very unforeseen happens, we should continue to see a demand growing at a healthy 5-6% kind of a level, if not more. I think last year it was 7.6. This year it should be 6.5 at least, and it should remain around this range going forward as well. So if you look at it, we have got to achieve 250 gigawatt of peak capacity this year. If you're growing at 5-6%, you're adding about 12 to 15 gigawatt of demand every year. But we are not adding so much thermal capacity, and renewables, while we are adding, obviously the utilization of that capacity is relatively on the lower side. So there will be demand for the existing capacities as long as you're able to offer competitive rates. There will be demand, and there will be scope for improving your utilization. And gas has its advantages, as we discussed during the early part of our presentation, in terms of the cleaner fuel, in terms of the ramping up and ramping down. It has its advantages, and there would be demand for it as long as you're able to offer competitive pricing.
Right. Thank you so much, Vikram, for breaking down these complex interplay of resources in the power system. Thank you so much for coming to our podcast and breaking this down for our listeners.